How can you use leverage to make ungodly amounts of money? Some people don't like the word ungodly. To make huge amounts of money while doing it safely. I just got asked this question. Someone commented, "Hey, Sam, how would a newbie trade? Because I've had an unprofitable streak." Let's go through it. Let's talk about how I would trade now in the market versus how I've traded in the past and how it varies. If you don't mind, hit subscribe so you can see future videos just like this. Just to be clear, this isn't right for everyone. Not everyone can leverage trade profitably, right? That's not something that everyone can do. So make sure that you're comfortable with the risks. Make sure you understand how to do it, what leverage is in the first place, because otherwise it's like a car. If you use it correctly, you can get where you want to go much faster. But also, if you do it incorrectly, if you use it incorrectly, you can hurt someone. So let's go over here. If you want to trade, there are links underneath the video. There are different platforms that I use, 3 of which I'll highlight here: WEEX, BTCC, and BitUniX. They all have different bonuses right now when you use my link, but I like using them. I like using multiple because it spreads out the risk a bit. Also, they all have slightly different features, different cryptos that they offer. So yeah, you can check these out underneath the video. Now, Bitcoin, it's near all-time highs, right? One thing that I love to do is leverage when we are dipping, right? And I'll explain how I would do it now too. Okay, we were dipping here, and I started a leverage position. I started another one here. I started another one here. These are around 5x positions, and I love to start leverage trades when we have fallen down a decent amount. And again, I'll explain what I do now versus what I'm talking about. But look at this, right? We had a 15% drop, and I opened a leverage trade. We had an 18% drop, opened another one. We fell down even further, and I opened another one when we were at minus 28%. Now, why would I open trades here? Well, we had seen some bounces around this $90,000 level, key psychological level. We had seen some bounces around 88 as well. You can see that was kind of a key area of support as well. We had some bounces around here and here. And then I opened another position here at 77 because I didn't want to get too greedy waiting for 74, but we obviously had some resistance back here at 74 and more resistance here on 74. So I was basically just not trying to get greedy. I wanted to open up new leverage positions, and as we went down, I just opened more positions. Now, these are not extremely leveraged, right? These are 5x positions, 5x. So what I knew was if we went down from 91,000, we went down another 20%. I could get liquidated. So I knew, my liquidation price was below where I thought we'd kind of rock bottom around 74, 75. And I was willing to put down more margin too. You can add margin to these positions to then lower your liquidation point. But you can see 65,000, 64,000 and 62,000. So I actually did add some extra margin to some of these positions just to be careful when we were around 77,000, just so that I didn't get liquidated or wicked out. If all of this is not making sense, well, there are videos that kind of explain the basics of leverage, but basically you're using the exchange's money or someone else's money to buy more of a certain crypto. So when I open a leverage position at 5x at $90,000, let's call it $100, I can buy $500 worth of Bitcoin. But that means because I'm 5x leverage, that if Bitcoin's price goes down 20%, I lose 100%. So you take your leverage times whatever percent drawdown or upside there is, and that tells you your percent gain. So at 5x, again, you're looking at 20% moves. So I didn't get too aggressive. It's not like I was using 50x leverage or anything because we were trying to catch a falling knife basically. And, now it turned out well. But there were a couple weeks here where I was down. I was red. So I love using leverage like that where we're already down a decent amount, but there are positive things happening. I think we're going to rebound and then we open up positions. It doesn't really matter. I mean, you're just trying to open positions when we're at a bottom, but it doesn't really matter if we go down further. I wasn't looking to close out if we went down to 86,000. I was willing just to continue adding as we fell. And then we moved up. So yeah, now I'm up 193%, 78%, 58% on these positions. But what about now? Right, we're approaching all-time highs. What if you want to open up positions now and you don't want to wait for another 30% drawdown? Because honestly, these don't happen all that often. Sometimes, well, recently, we've seen big moves to the upside, then retrace, and then big move to the upside, then retrace, then upside, then retrace, then upside. So like we could get ready for another big move up. That's what's been happening recently, like 100% moves and then drawdowns, and then 100% move, then drawdown. And yeah, we might be ready for another 100% move. The main risk here is that we break down and we actually go into a bear market. Because if we just go down 30%, let's say you're at 5x leverage and we do go down 30%, well, you can add a little bit more margin and then you can save your position, right? And then we go back up to new all-time highs. It doesn't matter. What you don't want to do is continue adding more and more margin, or you get liquidated, you open a new position, get liquidated, open a new position, but we go down to like $40,000, and then you just get liquidated towards the end, and your position goes to zero. That's what you don't want to happen. I don't think there's a huge risk in that right now, unless we go into recession or depression or there's another world war or something like that. I don't think Bitcoin's going to see another 40, 50, 60% drawdown relatively soon, maybe 40%. But Bitcoin held up really well here, actually, when the rest of the market was selling off really hard. Google, Amazon, Tesla all fell more than Bitcoin. Bitcoin's being widely adopted. We have the US president being very positive about Bitcoin. So I just don't see us falling down another 60, 70%. I don't see that as a very high likelihood. We could have that, but that's kind of the risk you run when using leverage, right? You don't want to be extremely long going into the bear market. Now, how do you get good returns then? Are you going to use extreme leverage to try to, get a little bit of extra upside because we're already up a lot? I don't think so. I don't think it makes a lot of sense to go like 50x leverage right here or 100x. If I was starting off some leverage positions now, let's say at $1,000 in my account, I'd use a portion of that, probably 40, 50%, to go low leverage on Bitcoin. Okay, I like using it on Bitcoin. If you feel strongly about other altcoins, maybe you can do that. You can use them on altcoins because alts will probably run harder if we go up to new all-time highs. We'll see Bitcoin dominance probably come down a little bit and alts will run harder. But Bitcoin is just easier to track. It's easier to trade. There's more liquidity going into it. More people are buying it. I think it's easier to trade just in general. So let's say you do that. You open up a 3x long position on Bitcoin and you only use half of what you're comfortable with. Okay, in a bad scenario, we start falling down. You can add more margin to your position and lower your liquidation price a lot. So then again, if you use 40 or 50%, maybe you put another 10% in and it reduces your liquidation price by a significant amount, to be clear. Like you wouldn't be liquidated until like 40, 50% drawdowns. Even then you can keep on trickling in more margin if need be. And unless something fundamentally changes, I would do that. I wouldn't really worry about stop losses. You can do that if you want. If you think, we're gonna go down into a bear market if we fall below 74,000 or something. Okay, great. You can put in a stop loss around 74, but that's essentially where you would get liquidated anyways right now. But the other side of it is we go sideways. Okay, well, you just kind of keep the position open. You don't really have to worry about it too much. If we go up, well, you only put in half of what you're comfortable with. But you can also trickle in more as time goes on into low leverage positions. That's honestly how I would start if I was a newbie, like based on where we are in the market right now. Now, if we go back into a bit of a dip, maybe you want to get more aggressive. Let's say we went down to this trend line, right? Not a huge dip by any means, like 5% or something like that, 4% from where we are right now. But maybe you want to get a little bit more aggressive and you want to try trading a little bit more actively. Okay, well, we've hit this line 3 times in a row. You could look at various indicators that kind of show you that we might bounce off this level, but just really simply, okay, we bounced off of it 3 times. Yeah, maybe we'll bounce off of it again. Like you can, if we went down to 102.5 thousand, let's say tomorrow, okay, you put in a buy order right here and you put in a stop loss at 102. and you could get more aggressive. You could do a 30x leverage or 10 or 20, whatever you're comfortable with. And then you could take profit or something. And that's if you want to get more aggressive. I'm not saying to do that. There have been certain times where I've been a little bit more aggressive. Like you can see here, I had a long position at an average price of 55,000. It was when we were in that dip last year where we went from 74 down to 49. I got a little bit more aggressive with a 7x leverage. And you can actually see we were pretty close to my liquidation price. I think it was on the way back up that I opened this after we hit 49,000. And I had some more aggressive like 80x positions actually when we bounced off of 49,000. But I closed those out because they were so aggressive. Those are more short term in my mind. And these like 7x positions, 5x, 3x, I'm willing to keep open a lot longer. But I think the key is you have to match your skill level with your risk tolerance. If you're not super skilled and you're worried about losing capital, okay, then you should go lower leverage, right? Like that's just, think about it as a slightly more aggressive way of buying Bitcoin that, again, has some downsides if we fall down drastically. But if you're willing to come at it from a place of strength, if you have some more capital that you can add to your margin, to lower your liquidation price, then really the only risk is, again, like a deep bear market or the exchanges go bankrupt or something like that, which, you know, there's always a risk of that happening, but these exchanges are printing money. And that's why also I use multiple exchanges. So, you know, that doesn't really affect me. And, you know, that doesn't happen too often either. The leverage exchanges have actually done really well for the last like 4 or 5 years since the last bull market started. But of course, approach at your own risk. Make sure you know what you're doing. This is just super simplified, right? If you were a beginner, what I'd be looking at. Of course, let me know your thoughts underneath the video. I really do appreciate it. I'll see you all in the next one. Again, links to WEEX, BTCC, and BitUnix underneath the video. You can check out the different bonuses and do whatever or use whatever one you feel comfortable with. Talk soon.